No, because there's just so much more attractive out there because people don't realize how much other parts of the market, besides maybe some parts in the equal weight S&P 500, but there's so much out there like software names that just sold off too much and they're too attractive compared to the Mag 7. So, if you look at like the IVJ, I think, or IVG software ETF out there, it's down 35% from the top. So software's down basically 35% from the top. And then you take a look at something like Microsoft. I know Microsoft is a Mag 7 stock, and it actually is one of the ones we do own in a very small weight in our portfolio. We started trimming Microsoft back in July of last year. Microsoft's like a 2 or 1.5% weight in our portfolio, but Microsoft is only up 10% from 2021 levels. So there's basically been this almost huge bear market and almost like recession, it feels like, in much of the market, but the indices just aren't showing it. I mean, the S&P's down, what, 2%, 2.5%? The NASDAQ might be down 6% from the top to bottom. So like a stock like NVIDIA that hasn't really moved much, it's been kind of the stabilizer, and Apple has held up much of this market, but there's so much more attractive out there. We've been buying into this software sell-off the past 2 or 3 weeks. Every week, the past 3 or 4 weeks, we basically have picked up two new software names that's basically cut in half 50%. So that's where we see the risk and reward, especially with the software names 10% below 2021 levels. So a lot attractive out there right now.
And look, Microsoft was not the best of the Mag 7.